welcome back to the channel, everyone. On today's video, I want to talk about my 2022 predictions for the stock market and why I believe them. But first, up on the screen, I have what these major indexes did in 2021. You'll see that it was an absolutely great year. The Dow Jones returned 16%, the S&P did 17%, and the Nasdaq returned 13%. So all above average, all very, very high. There's a bunch of new investors out there that are thrilled with themselves. Everyone feels like they're a genius because everyone made a bunch of money, right? Well, I don't know if you're a genius, but you did well and I'm happy for you. But now things are changing. The US has announced that they plan on raising interest rates and they're going to be doing so soon and aggressively. Well, the Fed doesn't say so in exact wording, but the market overall has interpreted what they've said, and this is what they believe. On the screen here, you'll see Microsoft. Now, it was trading at $335 about a week ago, and now it's all the way down to $312 today, which is a drop of just under 7% in 5 days. Now, this is not a common occurrence for an amazing company like Microsoft. Everyone knows Microsoft. It's one of the best companies in the universe, and for it to drop this much, market sentiment has changed. Down below, you'll see Apple, Amazon, Nvidia, and Tesla, and they're all down similarly, if not more. So you're seeing a PE ratio contraction. Microsoft was trading over a 36 PE ratio, and now we're under 35. This is significant. It would be nothing to be concerned about if it was just one company that was having this PE reduction, but we're seeing this all over the tech sector. We're seeing a pullback on the totality of the sector. Conversely to big tech going down, Canadian banking is all going up. On the screen here, I have the CIBC, one of my favorite banks, and you'll see it was trading at $149 exactly 5 days ago, and currently it's up at $156, a new all-time high, and we're up 4.55% in 1 week. And if we look at the other Canadian banks, they are all at or nearing all-time highs in the past week. And this all comes back down to the US once again. If the US raises interest rates, Canada and other countries follow. This is how it is. The US is the world leader in economics. Up on my screen, I have a lot of American tech stocks on here, and you'll see a sea of red, a sea of losses, and I think we're going to keep seeing this for the next little while. I don't know how bad it's going to get. But my prediction for 2022, based on the information that the American Feds are giving us, is that we're going to continue to see a bit of a multiple retraction in high-powered American tech stocks. And we're going to see a sector rotation into proven value stocks, okay? So you're going to see this. We've seen it already. That's why all these Canadian stocks are up. The money's flowing out of American tech and into value-producing stocks, such as the Canadian banking system, such as Enbridge, utilities, things that provide income. The higher interest rates end up raising, the higher the ceiling on these banks are going to go. Companies like Tesla here, with price-to-earnings ratio at 334, which is just absolutely astronomical, will not do as well in a high interest rate environment. In high interest rate environments, people want to invest in companies that turn large profits now. They want the income now, not future. Companies like Tesla, who have a lot of debt and who have a lot of capital expenditures, do not do great in this type of environment. So this type of tech stock on a whole, with these very high price to earnings multiples, they will come down. That is my prediction for 2022. I don't know how much they'll come down. I don't know what point it stops. I think it really depends on the Feds, how much they anticipate raising rates after the initial couple times. If they continue it for years and they make a statement saying, we're going to keep raising rates until we get to X percent, something like that, a forward-looking statement that will really impact earnings going forward, then these companies they're going to drop a lot. They're going to drop substantially. If they say they only want to raise the interest rate 1% and, take it easy for a bit and reevaluate, the drop won't be as severe. And it's the exact opposite for the Canadian financial stocks. I have Manulife up on the screen. Here's one that stands to do really well in a high interest rate environment. So the higher the interest rate ends up going, the more money Manulife and the Canadian banks make on their spreads for their loans and their investments. So what's bad for some stocks is really good for others. We're seeing the sector rotation begin already. You can see all the finance stocks going up. You can see the tech stocks going down. It's just a matter of when will it stop. That's the market prediction. I hope you enjoyed this video, guys. Let me know what you think is going to happen in 2022. Am I completely wrong? I might be. Let me know what you think. I'll see you in the next video.